Business Focus with Kudzi Sharara on the Champions League breakfast.
We are into Business Focus with Kudzi Sharara. Good morning, Kudzi. How are you today?
Good morning, Tinashe. Good morning, everyone.
Okay, great. Kudzi, let's begin by looking at Zimbabwe Stock Exchange trading update yesterday.
Yeah, thank you, Tinashe. So you know the ZSE has been on a downward trajectory of late. But again, you remember yesterday saying that some of the stocks were now looking cheap because of the devaluation, and sometimes investors tend to then look at that and say, okay, I need to get into these into these shares. And however, yesterday it recovered probably because of that kind of demand from those who are seeing opportunities to buy shares at a much lower level. So the All Share Index was up by a margin of 0.88%, and then the top 10 index are doing even better with a 1.3% gain. The top riser, which helped the market close positive, CBZ putting on 14.94%, Nampec adding 14.66%, Tenau up by 7.1%, Ariston adding 5.96%, and then Rio Zim putting on 4.39%. The market was, however, not short of losers. There are still other counters that are coming off. BAT being the biggest loser, down by 9.55%. Jeribot, which we'll talk about later, also coming off by 4.18%. I'm not sure whether investors were not happy with the numbers that were released by the company, but we'll get to hear more later on. Unifreight down by 4.15%. Miku's losing 3.64%, and then Citco also down by 3.4%. And then, but about 30 million worth of ZiG shares in Delta changed hands there. About 30 million ZiG worth of shares changing hands in Delta. I'm not sure what's happening there. Econet also about $1.2 million worth of shares changing hands. And then the VFX down by 1.5%. So that's how the Zimbabwe Stock Exchange performed yesterday. Ahead of, obviously, the president is expected to deliver his State of the Economy address, State of the Nation address, rather. So it's going to be delivered today at around 1 p.m. by the President Mnangagwa. So it will be interesting to hear his views and his analysis of the economic environment so far, as well as other areas of the Zimbabwean economy.
All right, thanks, Kudzi, for that one. As always, on a Wednesday, we've got the CEO's Wednesdays right here on the Business Focus on Capital. And of course, today we are going to be talking to one of the CEOs. And remember, most of the Zimbabwe Stock Exchange listed companies have released their half-year results. Some pretty good, some not so good. And today we are going to be talking to the CEO of Dairybot Zimbabwe. Is one of those companies, and that is listed on the Zimbabwe Stock Exchange. And we'll be speaking to Mesindoro, the only CEO, a female CEO. Of a listed company on the Zimbabwe Stock Exchange.
Yes.
Right. Yes. Good morning to you, Mess, and welcome to Business Focus right here on Capital.
Good morning, Tinashe. Good morning, Kudzi. Good morning to your listeners, and thank you for having Capital today.
Most welcome. Thank you so much. Let's begin by finding out from you. Tell us more about Dairybot's business model. How does the company make its money?
So we are a manufacturer and marketer of dairy food. Food and beverages. Mainly, our business is broken down into 3 categories, which are liquid milk, food, and beverages. Under liquid milk, we've got our very well-known brands, Chimombe, Terry, and Lacto. And under our beverages, we also have brands, Puko, Cascade. We also have teas in Quick Brew, and Fun and Fresh, and Natural Joy, which is a new listing on the block. In the food category, that's where we put our yogurt, our ice cream, salad cream, tomato sauce, and mayonnaise. So that is how the business is structured. And so we make our money from selling, processing, and selling those products.
Thank you, Miss, for that, giving us the company business model. Now, let's come to the results that you have just released. That's the half-year to June 2024 results. How would you assess the group's overall financial performance during that period, given the operating environment that we are in at the moment?
The $3 million profit posted for half year under review is a notable recovery from a loss of 736 that we posted in 2023, reflecting resilience in the face of a challenging economic environment. The business recorded volume and revenue growth for the half year. Dairy brands continue to perform strongly and are in high demand, which has allowed the group to perform profitably in a difficult environment.
All right, Messi, when we look at your business as Dairy Board Zimbabwe, despite the drought, the group managed to increase its raw milk utilization by 40%, according to your results. What strategies were implemented to achieve this growth?
Indeed, Dairy Board recorded a notable 40% growth in raw milk supply against a national growth of 22%. The efforts of our milk supply development unit, whose responsibility is to interact with farmers and grow raw milk, are beginning to bear fruit. The growth is attributed to an improvement in yield among existing dairy farmers contracted to Dairy Board and a proactive approach to expanding the farmer base through aggressive recruitment efforts. This robust performance in milk supply solidified the company's dominance in the market.
Yeah, that's interesting there, Messi. And talking about milk, you also have your liquid milks and the food category, which performed well according to what I saw on your numbers. The beverages category, however, experienced some decline. So maybe you can tell us what factors contributed to this decline in your beverages. Maybe you can also remind us maybe the products in the beverages category, and then what factors contributed to this decline and what measures are being taken to address this.
So under the beverage categories, we've got our strong brands, Tuko Maheu. We also have Cascade, there's Sun and Fresh, there is Natural Joy, and there's Nutriplus. We also have a hot beverage, which is our Quick Brew Tea. The beverages category contracted by 8%, primarily attributed to challenges faced by the Tuko Maheu brand. The other products performed well. It was mainly on the Tuko Maheu brand, which is a significant volume driver for the business. The difficulties arose from price adjustments necessitated by VAT modifications and the introduction of sugar tax. This was also compounded by the prevailing scarcity of small denominated coins for check. The business implemented a price reduction for Maheu, and subsequently we have seen improved the product uptake. Cost optimization along the value chain and continuous research and development for both existing and new lines will contribute to the growth of our product category. We recently introduced the Fugo with ginger, baobab, cascade, which have health benefits and have been very well received by the market. In the yogurt category, we introduced Yummy Gold, and in the liquid milk, we will soon be launching cartonized lactose for the discerning consumers. So research and development will play a key role growing our volume.
It is 7:45. This is Business Focus. We are talking to the Chief Executive Officer of Dairy Board Zimbabwe, Messi Ndoro, right here on Capitoka. Messi, when we look at the group as Dairy Board Zimbabwe, you recorded a substantial growth in export volume. What are the key markets for Dairy Board's exports, and what are the strategies that are in place to further expand your export reach?
So for exports, we have mainly focused on neighboring countries such as South Africa, Botswana, Zambia, Mozambique, and Malawi. These markets offer proximity and also cultural similarities and growing demand for our products. In a small way, we are also beginning to see some steady growth in exports into the United Kingdom. There are a number of strategies in place for the business to further expand our export reach. The toll manufacturing initiative in South Africa emerged as a strategic imperative for our business, as we were unable to meet export demand for that market from the Zimbabwe operations. The company also collaborates with local distributors and retailers in target markets to ensure efficient distribution and reach a wide customer base with our products. Maintaining high standards of quality and investing in brand building activities are crucial for success in export markets. So those are the key strategies that we will continue to pursue.
Messi, we've got a couple of questions that are coming through from our listeners here. There's one that says, CEO, zvimwe zvese mungagadzira henyu, but please, fun and fresh mixed fruit flavor haisi kubatika mumashops. Why?
So, sorry about that to our consumer. So the fun and fresh base is imported from Egypt. And because of the supply chain disruptions that we are facing, we normally have, we at times have stop supplies and shortages. So that is the only reason. But we will ensure, we are working hard to ensure that we have our products on shelf all the time. So part of generating foreign currency from our exports is to try and ensure that we consistently have the inputs that we import.
That's interesting there, Messi, that dairy body is importing from as far as Egypt. Maybe you can tell us in terms of your imports, level of raw material imports that you import as a company. I know you get some of your milk supplies locally, but what else do you import from outside Zimbabwe?
So we do import raw and packaging material. About 35% of our inputs are imported, and largely we are looking at packaging. The carton that we use for all our cartonized beverages, even for the Timombe, is imported. We also import stabilizers. We import milk powders, which milk powders we use in some of our beverages, and in Puko, use milk powder. So we are importing that. In Zimbabwe, no one is drying milk powder for that purpose. So we are having to import that. So largely we are importing packaging and raw materials.
Yes, you spoke about some of the raw materials that you are importing from other countries as well. When we look at the results as Dairy Board Zimbabwe, you faced the significant cost pressures due to imported inflation, tax changes, and of course exchange rate fluctuations. How did Dairy Board Zimbabwe manage to maintain profitability despite these challenges?
Yes, indeed, those cost pressures were there, and we were not able to entirely pass on the cost to our customers through pricing. Therefore, we had to aggressively pursue cost containment strategies to mitigate against margin erosion. While revenues and volumes registered growth from prior year, costs were contained, which improved the business performance. So it really was an issue of aggressive cost containment and reduction measures.
Thank you, Miss, for that one. There are a couple of questions that continue to come in, and I will not mention the products because team marketing to invoice, but so I won't mention the products that people are mentioning. But it seems some of your products, people are finding it difficult to get some of your products. What could be the reasons why some of your products are not found in the market?
It would be interesting, unfortunately, since you can't disclose which products, it would be interesting to really know which products are not available in the market.
Well, I'll send them to you later on, not on air, but I'll send them to you. Yeah.
What I can assure you is that we have significantly increased our production capacity, and we are continuing to do that. We will be receiving new equipment before the end of the year to further increase our production capacity. So it really has been an issue of us having constrained capacity, which we are addressing. So we are continuing to invest in new equipment to increase our production capabilities. And at the end of this year, we will be commissioning another new line.
So how do you anticipate the impact of the drought on raw milk production in the second half of the year? And of course, what measures is Dairy Board Zimbabwe taking to mitigate the potential shortages?
So the El Nino-induced drought severely impacted agriculture, including dairy farming. Raw milk production is expected to be adversely affected by the unavailability and rise in the cost of animal feed. Feed accounts for over 70% of the cost of growing milk. However, the business robust raw milk supply growth realized during the first half of the year is expected to mitigate some of these potential adverse consequences. So because we are sitting on very high ground at the moment, we don't expect significant reduction. Yes, there will be a reduction in output, but our half one performance mitigates against a catastrophe.
Okay, we've got another question as well coming from one of our listeners who says that retailers have recently accused manufacturers like yourselves of pricing goods using the parallel market rate. How has been your experience getting foreign currency from the formal markets after the introduction of the ZiG? That's a listener asking there.
I think like most businesses, availability of foreign currency from the willing buyer, willing seller has been very difficult. So as manufacturers, we are obviously in a very difficult place. where the retailers are citing that they are getting 85% of their revenue in ZiG and 16% in in US dollars. Therefore, we have to invoice them in ZiG. But on the other hand, our suppliers, even local suppliers and foreign suppliers, require to be paid in foreign currency. And we haven't been able to get enough foreign currency from the willing seller market. I think that's the summary that I can give to you.
Thank you, Ms., for that one. Now, the group emphasized cost reduction as a key priority going forward. What specific areas are being targeted for cost-saving measures?
So there are three main areas that we have identified as cost reduction, one of which is sourcing of more affordable and packaging materials, including taking advantage of the removal of tariffs through the Africa Free Continental Trade Area. We are also looking at improving process efficiencies and increasing throughput to reduce overhead costs. So as we increase our output, the unit overhead costs will come down, which will obviously benefit us. We are also looking at investing in solar projects to reduce energy costs and improve plant uptime due to minimum disruptions from power cuts. We also are looking at optimizing our inbound and outbound logistics as a way of cost reduction.
This is Business Focus right here on Capi Talk. With 6 minutes before 8 o'clock, we are talking to Messi Ndoro, the CEO of Dairy Board Zimbabwe. Messi, we understand that the board has decided to withhold the dividend for the first half of 2024. What factors influence this decision, and when can shareholders expect a dividend payment?
So the two main factors that influence the dividend decision were preserving capital to support volume growth expected in H2, and also the heightened economic uncertainties witnessed in Q3. As you know, the dividend declaration is a board decision, so I will not preempt what the board will decide by year end. But suffice to say that the board is very alive to the expectation of dividend by shareholders. An assessment of the 2024 full year performance will be conducted and an appropriate decision reached.
Yeah, thank you there, Messi. And then the group plans to fully commercialize its toll manufacturing operations in South Africa. What are the expected benefits of this strategy, and how will it contribute to the Dairy Board's growth?
So the biggest advantage for us on toll manufacturing products is collaborating with third-party manufacturers and the elimination or reduction of capital expenditure, because we capitalize on existing infrastructure and excess capacity of our manufacturing partners. So this means we have very minimal financial outlay as Dairy Board, which is a benefit to the business. But over and above that, it will then assist in our expansion for business with the opportunity to grow our footprint in South Africa and the regional markets. We also look at it as a competitive advantage through producing in a low-cost environment. It will also assist in foreign currency generation in the face of sustained foreign currency shortages in Zimbabwe.
All right, Messi, how does Dairy Board Zimbabwe incorporate sustainability and corporate social responsibility into its business operations?
So we do acknowledge that identifying opportunities and effectively managing economic, environmental, and social hazards across the value chain ensure sustainability. So as such, we ensure that our suppliers meet our sustainability standards, which include compliance with labor laws, environmental regulations, and ethical standards. Our processing and manufacturing processes are sustainable. We minimize the negative impacts of our business on our environment by using energy-efficient equipment and by reusing and recycling materials. Finally, we manage the end of life of our products sustainably. We are a member of a company called ZiG, which collects PET bottles for recycling, and we are also a signatory to an agreement with Tetra Pak on collecting Tetra boxes for recycling in South Africa. On our CSR projects, we focus on supporting old age and orphan homes as the vulnerable members of our communities. We also have an educational assistance bursary scheme, which we use to support talented children for non-managerial staff members from high school through to tertiary education.
Thank you there, Messi. And in terms of initiatives within the communities that you operate in, what sort of initiatives are you taking in to support communities in the areas where you operate? And also, I'm also interested in just knowing the kind of support that you give to the dairy farmers out there.
So we are a very inclusive company, and we pride ourselves to to be the only dairy processor which aggressively supports small-scale farmers for participation in growth of national raw milk production, allowing small-scale farmers from marginalized communities to earn an income and promote nutrition. So as a company, we have over 480 small-scale farmers and 13 milk collection centers across the country. And we provide financial assistance, HEISA programs, veterinary support. We have a team of veterinary doctors in dairy boards who go out there to assist our farmers, including the small-scale farmers. We also provide close to 1,000 vending opportunities across the country with a focus on empowering women who make about 65% of our vendors. We also create opportunities for small formal businesses for procuring from those small-scale businesses. So we are a very inclusive business as Dairy Board.
All right. Thank you so much, Messi, for that. And lastly, a question that's coming in from, maybe a suggestion coming in from Love Moka Shao in Kwadzana 1, who says, please ask Messi, we need nationwide retail promotions, especially competitions too, this festive season.
Thank you very much for that. We will look at that. Obviously, during the season, there are lots of goodies that we dish out, and we will look at expanding also into Kwadzana. So you will see us in Kwadzana.
All right. Thank you so much, Messi Ndoro, for talking to us right here on Business Focus on Capitalk as the CEO of Dairy Board Zimbabwe. We truly appreciate it. Have yourself a great Wednesday.
Thank you very much for having me, and you have a lovely day. Thank you.
Welcome. Bye-bye. So that has been our business focus for today. We've been talking to Dairy Board Zimbabwe Chief Executive Officer, the only female CEO of a Zimbabwe Stock Exchange listed company, Dairy Board Zimbabwe, right here on Business Focus. Thank you so much, Kudzi, for Business Focus for today.
Thank you, Tinashe.
Business Focus with Kudzi Sharara on the Champions League Breakfast.